Let's talk about gold. For, well, basically all of human history, it's been the ultimate symbol of wealth, of stability. But lately, something's different. The price has just gone wild, and pretty much everyone is trying to figure out what is going on. So, what's the real story here? Let's dig in.
Okay, just picture this number for a second. What if gold didn't just climb, but absolutely smashed through the $5,000 an ounce mark? I mean, that's not just a little bump. That is a fundamental shift in the market. Today, we're going to explore the forces that could actually make that happen.
And that right there is the big mystery we're going to try to solve. What on earth is going on that could push this ancient metal to a price we've never seen before? And why is it happening right now?
To really get to the bottom of this, we need to think like investigators. Think of it like a giant onion. We're going to peel it back one layer at a time. We'll start with the obvious stuff on the surface and then dig down deeper into the hidden economic currents that are really driving this thing.
So, our first layer. It's all about psychology. It's about the herd mentality. It's about what happens when an asset just catches fire and suddenly everyone wants in on the action. You know, the simplest reason for gold's big climb can be boiled down to just one word: momentum. It's a pretty straightforward idea. A price starts to rise, it makes headlines, traders take notice, then the rest of the world takes notice, and the whole thing just starts to feed on itself.
And this right here, this is the engine of that momentum. It's the FOMO feedback loop, fear of missing out. The price ticks up, the news goes crazy, and new investors start piling in because they're terrified they're going to miss the boat. And all that new demand, it just pushes the price even higher. It's a super powerful self-feeding cycle.
And look, this isn't just a fantasy. History actually shows us that when gold gets going, it tends to keep going. The data suggests that major rallies like this often have real staying power, and that history gives investors even more confidence to buy in, and, you guessed it, fuel that momentum even more.
So you might be wondering, where is all this money coming from? Well, a big piece of the puzzle is simple diversification. A lot of investors are starting to get nervous about tech stocks after their huge run-up. You hear those whispers about a potential bubble, kind of like the dot-com crash back in 2000. So what are they doing? They're cashing in some of those profits and moving the money into something that feels, well, safe. And for literally thousands of years, gold has been the ultimate safe haven.
Okay, so we've looked at the surface frenzy. Now let's peel back that layer and go a little deeper. We're now looking at the foundational cracks in the global financial system itself, the things that are making gold shine so incredibly brightly.
One of the most fundamental relationships in all of finance is this little seesaw between gold and the US dollar. Because gold is priced in dollars, when the value of the dollar gets weaker, it takes fewer euros or yen or whatever to buy an ounce. That basically means gold just went on sale for the rest of the world, which drives up demand and, in turn, its price.
And right now, the dollar is definitely feeling the pressure. It's been sliding for a while now, and you've got this mix of political uncertainty and all these questions about what the Federal Reserve is going to do next. It's just creating a lot of doubt. And when investors get nervous about the world's main currency, they instinctively run towards gold.
The next piece of this puzzle is interest rates. Now, here's the key thing to remember. Gold doesn't pay you anything to own it. It just sits there. So when interest rates are high, you can get a nice, safe return from a savings account or a government bond. But when rates are low, suddenly those bonds look a lot less exciting, and an asset like gold, with its potential to go to the moon, starts to look way more attractive.
And here's the really crucial point. The market is always trying to guess what's going to happen next. Investors aren't just sitting on their hands waiting for the Fed to actually cut rates. No way. They expect rates to fall, so they're buying gold now, trying to get ahead of the curve. That anticipation alone is a massive, massive driver of what we're seeing.
So, we have peeled back investor psychology and the economic fundamentals. But now we get to the final and maybe the most powerful layer of this onion. This is about the biggest of the big players in the game, the ones with nearly unlimited money to spend.
So if regular investors and even big hedge funds are making waves in the market, who are the real whales out there causing a tidal wave? Who is buying up so much gold that they can actually move the entire global market?
The answer is central banks. We're talking about the very institutions that manage entire national currencies, from China and India to Poland and Brazil. They have been on an absolutely unprecedented gold buying spree.
I mean, just look at this chart. It shows how unbelievably dramatic this shift has been. For years, central banks were actually net sellers of gold. But then, around 2010, they flipped to being buyers.
And since 2022, their buying has just gone into overdrive. In a world with so much geopolitical tension, entire nations are just rushing to gold for some stability.
And this quote here from the World Gold Council explains exactly why. For these countries, this isn't just about making a profit. It's about security. It's about stability. By loading up on gold for their reserves, they become less dependent on the US dollar and build a hedge against all the uncertainty in the world. It's a huge strategic move to protect their economies.
Okay, so we've peeled back all the layers: the investor FOMO, the shaky economy, and the absolutely massive appetite of central banks. Now let's put it all together and ask the big question.
And here it is all in one place. It's not just one thing causing this. It's a perfect storm. You have the momentum of the crowd, a flight from what people see as risky stocks, a weakening US dollar, the expectation of falling interest rates, and the whole thing is being propped up by this relentless buying from the world's central banks. Every single factor is pushing in the same direction.
When you step back and look at it, every single driver we've discussed is pointing up. The momentum is powerful, the economic argument is solid, and the world's biggest buyers are showing absolutely no signs of slowing down. So the real question isn't if gold could hit $5,000, it's how much higher it could possibly go from there.